All right, everyone. Uh, Today we're gonna come back and look at my experiment again. We see today price is 77.8, now 77.97. Yesterday when I did the podcast was 77.7. So the price not moving, not really moving that much because I feel like the investor they're waiting for something like because the gas price and geopolitical and everything. But for some reason, they did not sell neither. I feel like they just waiting. They're not selling or they're not buying. That's why the price not moving that much. So we see like we still up to today we still lost about $1,000, and we see July is 85. July, I don't know. At the end of the July, forecast about maybe it close July at 85, and August maybe it close at 94, and then at the end of the year close at 112. So we'll see what's going on, and is it like that gonna happen? But this is an experiment, so we see the price today it go up and down very little. That is not normal with it's not normal with cryptocurrency because it go down and go up very low. So it's not like this couple days not that volatile. It stay around 77, 76, 77, so 78. So and this experiment we're gonna see at the end of the year if we're gonna make any money at all, and if we make and how much it make. And other experiment to see uh when it gonna go up to the all-time high about $240, $250. We'll see sometime it take 3 years, sometime it only take 1 year. But like this time I feel like it's not gonna come back that it's not gonna come back that quick. We see is last year it go from 140 to 240, about June to December. But this year, I don't think it's gonna go up that much. I would say, but I think maybe not even this year, maybe at least 2 years to go back to the higher price. And yeah, so Bitcoin and Ethereum and everything, it look like it moving sideways. It doesn't go up and down that much. So we will see. Look like investor, everybody doing the wait and see strategy. The stock price, the same thing. It's not like, today it's like going down a little bit. Everything is just like go down a little bit. Dow Jones, Nasdaq Composite, it also come down a little bit, but not that much. Pretty much it's moving sideways. Gold, on the other hand, is went up quite a bit from 4,114 to 4,167, and now 4,133. But in 5 years, it actually went up a lot from under 3,000 to more than 3,000. So the gold actually doing well. And also TWI oil is crude oil. It went up to $88 and it came down to 86. And SpaceX of Elon Musk, it come down a lot today to 114 and now it stay 115. So this stock is, it's a really good stock. I want to buy it, but I will wait until at least it go down to, if it go down to under $100, I'm gonna start buying it. If not, I'm gonna like wait until January or February when all the all the people that not able to sell in 6 months, then then I could sell it. Then when they could sell it, and when they sell it, it's gonna go down some more. So you see, in this one is in June, so 6 more months in January or February, they start selling, and the price gonna keep coming down some more. And when that happen, I can start buying. Tesla, it came out with earning today. Let's look at Tesla stock. That is not normal because usually when it when the earning they come out with the earning, usually they're doing well, but not today. The stock go up, but it's not that much. Okay, look at the news today. You see S&P 500, Dow Jones, everything go up and down, very low. The Brent crude is stay high, 94 to 95 barrel. Treasury yield went up about 2 basis points. US gasoline average about $4.06 per gallon. Oil rise sharp as the Middle East risk return. Brent crude advanced roughly 3% to 3.5% to the high level in nearly 6 weeks. The immediate concern is that escalating U.S.-Iran hostile and threat from Iran-backed Houthis could disrupt the shipping through the Strait of Hormuz and Bab el-Mandeb. Bab el-Mandeb. These routes are critical for global oils and refuel and fuel transportation. Even without a complete shutdown, tanker delays, higher insurance costs, and longer shipping routes can be increased energy price. Why this matter? Higher oil push inflation back up. Airlines, transportation companies, manufacturing, consumers face higher costs. Energy producers may benefit while consumer discretionary stocks may struggle. Persistent inflation could make the Federal Reserve more willing to raise interest rates or delay future cuts. So let's look at the map. I think the Saudi Arabia, I think they hit the most because they had two waterway that came out of Saudi Arabia. When the Strait of Hormuz closed, they actually built the pipeline so they got the oil out of the strait, this strait, what they call the strait around Yemen, they call Bab al-Mandeb Strait. But now the Houthi gonna the Yemen back. I think the Houthi, right? The Houthi. Yeah, the Houthi will close the Strait too. So they pretty much the Arabi Saudi they don't have place to go. They can go through the Suez Canal and travel around the world and take the oil to China, which is a lot of burn a lot of gas, a lot of fuel to travel, and it take a lot longer too. So this is yeah, this is the problem, especially with the Saudi Arabia, and see what Trump gonna say, gonna do with the Houthis, because this strait a lot smaller than the Strait of Hormuz. So this one will be easier to shut down than this one. So before when they take the oil, go to China, they go here or here around Indian Ocean and go through Malaysia and Singapore and go to China right here. So right now, since that's not happening, so that's why the oil price is really volatile, really increased right now. So that's what is happening. Wall Street remained cautious despite strength of semiconductor stocks. Major indices were mixed as investors balanced strong corporate earnings against higher oil prices and Treasury yields. Semiconductor stocks gained approximately 1%, supported by NVIDIA, AMD, super microcomputer. However, the software and service index dropped around 2.9. Utility and material were among the stronger sectors, while consumer discretionary and several light technology stocks weakening. 10-year Treasury yield rose to approximately 4.66%. Higher yield generally make bonds more competitive with stocks and reduce the present value of the company. Future earnings, which can pressure high value growth stocks. Alphabet and Tesla earnings could determine the technology sector's next move. Alphabet, Alphabet and Tesla are scheduled to report after the market closes. These reports are especially important because technology valuation remain elevated and investors are demanding evidence that AI spending is creating actual profits. For Alphabet, investors will examine Google Cloud growth, advertising revenue, Gemini and other AI products, capital spending on data centers and AI chips, whether AI products are improving or reducing the profit margins. For Tesla, the focus will be on automotive revenue and delivery growth, vehicle price reduction and profit margins, free cash flow, energy storage growth, robotaxi, autonomous driving, and low-cost vehicle plans. A strong Alphabet report could support NVIDIA, AMD, and Broadcom, Microsoft, and other AI-related stocks. A weak report could renew concern that AI infrastructure spending is growing faster than AI revenue. Super microcomputer jump after reveal 60 billion in orders. The super microcomputer reported more than 60 billion in new fourth quarter orders as cloud providers and technology companies continue to purchasing AI servers. The more encouraging figure were its expected growth margin of 15% to 17%, substantially above an earlier estimate of approximately 8.2 to 8.4%. So they have better profit margin now. The company attribute the improvement to a more favorable combination of custom, customers and products. Revenue is still expected near the lower end of its previous 11 billion to 12.5 billion range, meaning some order may not have converted into revenue before the quarter ended. Investor interpretation demand appear exceptional strong, but investors should determine how quickly the company can deliver its backlog, collect payment, and produce sustainable free cash flow. Official results are expected August 11. AT&T beats the subscriber earning and cash flow expectation. AT&T added 432,000 postpaid wireless subscribers, considerably higher than the approximately 338,500 annually expected. Other important number included 367,000 new fiber customers, 279 fixed wireless customers, 31.6 billion in revenue, adjusted earning is $0.65 per share versus 0.59 expected. 4.7 billion in free cash flow. So they have money and the company doesn't do anything. AT&T bundle wireless and home internet strategy appear to be improving customer retention. Approximately 42.5% of its advanced internet customers now also use AT&T wireless service. The company also expects approximately $10 billion in 2026 share repurchasing. So they have free cash flow, and now they're gonna spend the cash flow to buy back their share. That's good. That's good strategy. With the dividend and share purchases together, projects about $18 billion. So they spent $8 billion to give dividend and share buyback, stock buyback. Why it matters? AT&T is increasingly being viewed as a cash flow and a shareholder return investment rather than simply a slow growth telecommunication company. Its debt level and ability to maintain subscriber growth remain important risk. Philip Morris beat expectation but lower its annual forecast. Philip Morris reported second quarter revenue of $11.19 billion and $10.63 billion analyzed analysts expected. So they actually beat the expectation too. They're doing well. This company sell nicotine products. Adjusted earning increased from 15.2% to increase 15 adjusted earning increased 15.2% to $2.20 per share. This one they're talking about earning per share. Traditional secret volume unexpectedly increased 1.1% to 156.9 billion units, supported by demand in Turkey, Indonesia, Egypt. The company also planned to invest more aggressively in zinc nicotine pouch as competition increased. However, Philip Morris lowered its full-year adjusted earning forecast to 8.26 to 8.41 earnings per share, mainly because foreign currency movement reduced the value of overseas profit when converted into dollar. Because the dollar now is very strong. That's why the the foreign currency profit it would earn more, but it less in dollar. Investor interpretation: the underlying business remains strong, but the currency pressure and expensive competition in nicotine pouches could limit earning growth. Airbus announced a €5 billion share repurchase program. Airbus share rose more than 6% after the company announced a €5 billion buyback and new medium-term financial target. Airbus expects adjusted operation profit to reach 12 to €13 billion by 2029, compared with 7.13 billion in 2025. It also plans to increase narrow body production to approximately 70 to 75 aircraft per month by 2027. So Airbus and Boeing they have the other kind of problem. They cannot build enough planes to supply the customer. The company continues to target 870 aircraft deliveries in 2026, and it considering increased a 300 a 350 production because of strong wide-body aircraft demand. Why it is matters? The buyback senior management's confident in cash generation and improving supply chains. The main risk remain engine availability, supply delay, production execution, and exposure to global airline cycle. European stock reached the two-week high. The Stock Europe 600 closed 0.6% higher at $647.07. Energy, aerospace, and defense companies led the gains, while technology share declined approximately 0.5%. Notable individual move included Randstad up nearly 14%, Airbus approximately 7%, Fiat approximately 11.2%, Nestle up approximately 2.2%. Randstad reported 1.9% organic revenue growth, beating approximately 1% for cash. Germany returned to growth. Iberian revenue increased 11% and North American growth improved to 4%. Because staffing company experienced change in hiring demand quickly, Randstad's result may indicate that parts of global labor market are beginning to improve. The UK inflation falls, but the improvement may be temporary. The UK inflation declined from 2.8% in May to 2.6% in June, its lower level since March 2025. Additional figures show core inflation remained 2.6, service inflation is to 3.6%. The Bank of England's interest rate remained 3.75%. Lower fuel, food, clothing, and transportation price help bring inflation down. However, higher oil price and a planned 13% increase in household energy price cap could push inflation back toward 3.5% by the end of the year. Bank of England expected to hold rates at its next meeting, but one or two increase remain possible if energy price and service sector inflation stay elevated. Japanese Japan warns of intervention as the yen reach a 40-year low. Yen weakening beyond 163 dollar per yen per US dollar, its lowest level since 1986. Japanese officials said they are prepared to take decisive action if currency movement become excessive. The yen is under pressure because the US interest rate remain higher than Japanese rates. Rising oil price increase Japanese import costs. Japan's import costs. Investors remain concerned about Japanese fiscal policy. The dollar is benefit from geopolitical uncertainty. The Bank of Japan raised its policy rate to 1% in June, but the gap with the US rate remains substantial. 1%. If you borrow the money in Japan, it's only 1%. Wow. So Japan have really low rate over there. So you can pretty much to buy a house and everything 1%. But this one is the central bank rate, Bank of Japanese rate. However, maybe you add like 1 or 2 more% to buy a house, it's still very low. Market impact of weak yen have Japanese export when foreign earnings are converting back into yen, but it raised the cost of imported oil, food, and raw materials. Direct intervention could produce a rapid but possibly temporary yen rebound. Two additional risks monitor Canada tariffs. The US, the United States announced 50% tariffs on approximately 20 billion of Canadian imports, including products in dairy, alcohol, clothing, and construction material industry. The tariffs are scheduled to take effect August 19. Pharmaceutical tariffs. President Trump said generic drug would receive a 2-year exemption followed by possible 100% and eventually 200%. This could encourage drug production in the United States, but it could also increase the cost and disrupt the pharmaceutical supply chains. Bottom line, today market is caught between the strong corporate earnings and two major macroeconomic risks, rising oil price and higher interest rate. Alphabet and Tesla earning are the most important immediate catalysts, while oil remain the biggest threat to the broader market. Hi everyone, thank you for watching, and that's all I have today. And we continue to monitor my experiment together. As of today, we still losing, but hopefully at the end of the year we winning some, and also I'm gonna leave some of the share until it reach $250. So that share I'm not gonna sell until it reach 200, maybe 240 or something, maybe about 200. I can start selling, but so that is experiments how long that I'm gonna keep that until until it go up to that much, the all-time high price. All right, everyone. Thank you for watching today. I see you in the next episode. Bye bye.